Hey, good morning. This is Monday, August 11th, 2008, and welcome to today's Master Pattern Report. Well, we got a lot of information for you today. One of the first things I want to talk about is oil, and this contention recently that it's not the speculators, but it's price and demand. Supply and demand that's driving the marketplace. You know, when you get into research, it's an interesting thing how the truth seems to slip out from these innocuous, seemingly events. And in researching the whole phenomenon about where this oil explosion came from, and the contention that it was from demand. It's hard to conceive that the demand for oil doubled within the past year, because that's exactly what the price of oil did. It's more than likely that what happened is that oil started its upswing from a seemingly unknown factor, and that was that about a year ago, maybe a little bit more now, the Exchange Commission in Chicago decided to do away with the pit boss. And now the pit boss, for those of you who may not know, is the individual who sits in effect in the pit and kind of controls bidding among the traders to make sure that there's orderly and transactions and that nothing hanky-panky is going on. Well, a little over a year ago, the board, in its wisdom, went to electronic control, electronic trading. And ever since then, the market has gone absolutely crazy. I'm not saying that that was the only factor involved. Personally, I think what happened was things kind of got out of hand when that went into effect. And then people just saw the effect and saw the bullishness of what was going on and jumped on and drove the price up even higher, and not necessarily speculators, but people like you and I. So in reality, when we had predicted back in June that oil was going to be seeing $80 a barrel again, it was simply based on the fact that logically and mathematically that seemed to be the price of oil that made sense given the supply and demand factors in place. And many of the behind-the-scene oil experts seem to feel that there was something going on that didn't impact things the way they should be, and that it was certainly out of control. So where will oil go? We think that eventually it will be down around that $80 to $90 a barrel, as we had predicted back in early June. And that does not necessarily mean that heating oil and gasoline prices are going to fall proportionately, and they never do, as we know. So that might be good news for the marketplace. And in fact, we think that that's going to be one of the factors that will drive the marketplace quite high before the end of this year. We see that by the end of this year, the market will be in a fairly strong bullish mode. So that's the good news. The bad news is that the $1 million you're going to make between now and then in the stock market is going to be worth about $10,000 or $15,000, because between inflation and taxation, you're not going to have as much money as you think. I'm not saying you're going to lose if you were to make good profits, but with local, state, and federal taxes that are going to be needed to keep government in place and keep us running and support these various support programs, bailout programs, it looks like we're headed for some pretty nasty times in that respect. Okay, so now next I want to get on to an explanation of our program and the different components of our program, because there's been some questions and some curiosities and also some misnomers concerning the program. The first program that we have is the prediction of big move days. And by big move days, we mean moves within the day that are somewhere around 150 points and higher. When we give a date, we always give the caveat that it's within one day. So if I say on the 14th, it could well hit on the 15th. And the reason for that is this: the graphics of the geometry that we use in our charting are at this point very difficult for us to read. Believe me when I tell you, this program is a home run, but it's a labor. And until we correct our program, our computer program, so that we can eliminate that factor, we still give this caveat that we give a date and it's within one day, okay? And that should still give you some room to act accordingly with the market if you are following our advice. But at least it's qualifying what we're saying and what we're doing. Now, one of the other parts of the program is the predictor, the directional predictor. And what that does is it tells us what direction the market is going to move. Now, we have tried a number of different scenarios. We think we have found one that's pretty successful and that will work to a high degree, a high standard that we like to set. We'll let you know about that. I will try not to make predictions in that arena because we are uncertain as to the validity and accuracy of that particular model. The third part is the resistance points. Okay, the resistance, what we call the energy lines, and it was this particular model that we used to predict the top of oil. If you remember back in June, early June, when oil was in the 130s and going nuts, we predicted that oil would hit a top of 147 and then begin its retracement. In fact, oil hit $147.10 and started its retracement. And the model that we used was this predictor resistance model. Okay, so we have three different models that we're using right now. There are others that we're experimenting with. Unfortunately, we're still in the beginning stage here, and we don't have the facilities yet, the resources yet to get to everything that we'd like to. But it's happening, it's coming, and it'll come soon enough as far as we're concerned. Now, let's. I want to take a look back at how we did last week, and because I think it was significant. We had called for the August 4th, and the move, although the market was down over 100, 110 points, we didn't consider that a significant move. So we kind of felt that Tuesday was going to be the carryover day, as I indicated before. And sure enough, the market took off on Tuesday. We scored a 53% return on our investment Tuesday, not too bad. And then we went into Friday, the 8th, which we had predicted. And the 8th, we caught it right from the beginning, and we ended up with a 400% return on our investment.